Ladies and gentlemen, welcome to the SoFi earnings pregame show. Let's do it. All right. We got SoFi earnings tomorrow. We got it at, less than 12 hours. We'll be going live at 7:30. We'll be halfway through the earnings call by now if it was 12 hours. And yes, literally the first comment, only 24 hours late. Dude, I was heartbroken. I had no idea. Okay, so it's my fault 100%, but I accidentally set all the times correct, and then I closed out the tab, and whenever I reopened it, I guess it reset to like Streamlabs has it as StreamYard has it on today, and it just forwarded it one day. So yeah, sorry to the people that got confused. It was meant for Monday. I was just getting a little bit of early work in, and wow, did it come to bite me in the butt. Holy crap. But that is not going to stop us. Apologies. Hopefully the apology is accepted because we're moving on. I don't care. Let's talk about some earnings. Let's hear. So this is another thing. SoFi tomorrow is what I'm going to be covering. If I get another PayPal person on the live stream, then I heard that I can talk about some PayPal. But if it's just like Tevis, Chris, and I, which is right now the people who have 100% confirmed, then we're only going to talk about SoFi. Okay, we can only do one earnings call. So I'm either going to do it one of two ways. Either another big, sort of PayPal person comes on and joins the show. So that would be like Steve, for example. That would be Jesse. That would be Roy. Any of those guys join in, then we're definitely going to take it down a PayPal route just for a little bit. We're not doing the earnings call with them. But another way that we do it is I just do back-to-back streams. Okay. I just disregard my actual work and I go straight into one live stream, which would be SoFi with the boys, and then jump into another one right after at like 9 o'clock, and then take it away with PayPal news for you guys, which I think that's probably what I'm leaning into doing. And hopefully that'll be fun. I hate to break it into two different streams, but the problem is that we're multi-streaming with Tevis and everyone, and his audience does not care about the stocks that I care about. Joshua is the guy that saved me, even though I was still like an hour and a half late. He emailed me and was like, I don't know if you know this, but I didn't even have my phone on me. That was the problem. Anyway, whatever. Are we mooning tomorrow or what? I want my Lambo. I mean, it's all going to be on guidance. The next quarter is not expected to be all that strong. Okay. So it's dependent on if they are actually going to, well, one, beat the quarter that they set out already. They set the bar very low. So to beat it would be amazing, but it doesn't mean that we have to beat the quarter that we just had. So what I mean by that, I still expect some sort of contraction on revenue, definitely a contraction on net income, but that might not be the exact same case. Like they can do better while still contracting, if that makes sense. Who knows? Is Captain Crunch going to get his wish to 6 tomorrow? I mean, some people might be betting on that. We'll talk about that later in the show. I'm currently sleeping on SoFi Stadium sidewalk like it's a Star Wars midnight release. You're also giving away your age a little bit there. For me, if you were to talk like my age and say like, hey, what were the big things that people were sleeping on the sidewalk for? Is like, I don't know, Avatar or Call of Duty. That was the ones that I always remembered, is that people were like waiting for video games. But I don't think anyone slept on the sidewalks to watch the new Star Wars. Like, that wasn't the case. No, Eastern Standard Time. Great question. Okay, it's going to be unbelievably early for you guys, so sorry about that. But I don't create the rules. Unfortunately, the entire stock market is based in New York, so you're kind of, if you're in like California, you're kind of at the qualms of living where you are. You enjoy the weather, but the stock market is definitely earlier. So yeah, I'm talking Eastern Standard Time. That means I'm getting up for like the actual release date of the quarter will be at 7 a.m. or what is that, 4 a.m. Pacific Standard Time. And then the call will be at 5 Pacific Standard Time or 8 a.m. Eastern Standard Time till 9. If that makes sense. A lot of words, but yeah, maybe someone can write it out and I'll throw it up on screen. 3-hour difference. EST rules the world. Yeah, I know. It just happens to be the biggest financial city in the world is in Eastern Standard Time. Then couple that with a couple other really big cities like Toronto and stuff. I mean, hey, it's a good time zone. All right. Lending Club reports tomorrow as well. Yes, that's true. It's in after hours. Okay. So for the real big fintech fans, you're going to be listening to 3 calls tomorrow. You're listening to SoFi, you're listening to PayPal, and then you're listening to Lending Club in the after hours. We're lucky if we get 2 cents. So here's the thing, Dennis. We're not going to have any sort of gap shenanigans, if I wanted to say that. Like all of the money that will be reported for earnings will be like actual earnings. It's not going to be any sort of write downs or anything along these lines that might affect earnings from a financial statement standpoint, but not actually put money in SoFi's pocket. That's not seemingly going to be the case this quarter. So the money that they make is going to be very real, right? Lending is going to be making money from interest income, real. Selling loans, real. Financial services, bringing in money, interchange, referrals, all that sort of stuff. Tech platform, that sort of stuff. Yeah, so Dr. J81, you're 100%. Let's talk about that. Let's just jump into a couple stories. So this did happen today. 20 million shares were borrowed by funds tonight. That may not be to short tomorrow. Now, I think Crossroads wrote a story on this, which I thought was pretty impactful, which he was just talking about how cheap it was, respectively, to actually borrow these shares on SoFi right now. And they may just be doing this to get a better price on shorting those shares if indeed something does happen. Now, if earnings results come out and they're absolutely terrible, then they might have missed their boat on shorting it. But just because things are borrowed doesn't mean that they are shorted, if that makes sense. But yeah, who knows? Did they see leaked earnings? We'll never know. But I'm not going to take that into account so much so that I think that, earnings are not going to be good tomorrow. What is the over-under on Technisys news release that aligns with version 3.0? I don't know, man. Like, that's such a shot in the dark. I've got no clue. Have they released news on earnings dates? Yes. Is it seemingly becoming more popular for companies to do this? Yes. Does it seem very quickly after 3.0 was released? Maybe. So I'm honestly putting it at a 50-50. I could see it going both ways. I know that's a cop-out answer, but the truth is I don't really have an answer for you. Shane, by the way, hopefully you're doing well. Ark sold 14 million shares, not even freaking close. Okay. They own, I think, about 14 million shares. They haven't sold a thing. So everyone's getting a little confused here. And I know that not everyone watches every single one of my episodes, but I'll just clarify really quickly once again that Ark is a fund of other people's money. Okay. So if you invest in Ark and then leave it in a couple weeks, they only had your money for that small period of time. And during that time, they may have purchased SoFi shares, but then they're forced to sell it because you left. So is Ark selling SoFi? Not at all. I mean, in terms of how are they reweighting their portfolio? Well, they've only purchased SoFi. They've never sold a share of SoFi. But the overall fund, like how much the overall weightings, not that they change, but how much money is in each one of those weightings, well, that can change just based on investor sentiment. And just to get into it really quickly, if you want proof, you can go back to the old episodes. But there's less money in ARK funds this quarter than there was last quarter. So that's why they're selling. But they're selling in every single one of her other positions. So she's not selling SoFi specifically. She's selling everything. Shouldn't the bank portion be filed by now? No. So that is true that SoFi files earlier that the bank filings can sometimes come earlier than the earnings, but SoFi has been continuously posting earnings earlier and earlier. Okay. So for example, Lending Club used to come out about a week earlier as well. We would get some indication of how good SoFi was doing if Lending Club was doing well. But now Lending Club is actually technically reporting later than SoFi, only by a little bit. But so SoFi's pushed their earnings dates so much closer. They're bumping them out fast, like banks do. And so we'll see. In terms of we'll see, I mean, we'll just have to know without the bank earnings results. Oh, and if anyone doesn't know what he's talking about, by the way, because that might be confusing to some new SoFi investors, SoFi is a regulated bank, which means not only do they have to report their financial statements to open markets, but they also have to report it to some other banking regulators, and they keep that information open and available. So what that means is before, back in old quarters, we would be able to go into those banking regulators like forums and see SoFi's numbers for the bank portion of their business before we even saw it here, if that makes sense. I don't care about the report. I just want to know what's in 3.0. I mean, yeah, it's super interesting. I've got like 80% of my money or 80% of my mind share bet on the idea that it's Technisys, right? It's supposed to be in this time frame. They've been slow on releasing new products for the longest time. Why would they build on old infrastructure, right? You'd want to build on Technisys and these sort of things. So I think that that's super important, especially getting it out right before rates come out. So one of the biggest features of Technisys, from what I could hear, is whenever you have this insanely modular core platform, you can adjust interest rates on a per account basis extremely quickly. Okay. Going in and just changing the percentages, like it's a built-in function of the program. Well, that is not the case, by the way. Before, there'd be multiple steps, could be weeks, months, whatever. So right before rate cuts, if you guys don't know, this is what's going to happen as rate cuts start to come. These banks that are offering extremely high APYs that have a very small margin for profit are going to start cutting their offerings for APYs. Now, that's not necessarily a bad thing. I mean, it sucks because you get less risk-free reward, but that also means that more money flows onto the markets, right? But essentially, you should pick some sort of regional bank, community bank, one that is trying to offer as good of services as SoFi, but just not quite there. The companies that might be offering 3% APY, right? Follow theirs. And this is the way that I look at it to see if SoFi is going to maintain their edge to consumers or if they're going to expand it or whatever, is if that 3 goes down to 2.5 on a 50-point basis cut and SoFi goes to 4.1, then that's still fine. If 3 goes to 2.5 and SoFi goes from 4.5 or 4.6% all the way down to 3, then that margin has shrunk. And that means that SoFi is looking to potentially expand their profits and not take as much on the cost of capital side. They're getting a little greedy. So you can kind of measure that out in terms of basing it on their consumers. As long as they are sort of in line with competitors, then interest rates are going to have to come down. They can't afford to keep it at 4.6% forever. Now, management has spoken out and said, we are actually going to keep it much higher than what is profitable to keep it at, because not only do we have a larger profit margin or safety margin than the other competitors, ones like Robinhood and these sort of ones that are essentially paying to have their APYs that high versus SoFi that is perfectly built in-house. They're not paying any sort of fees or splitting any sort of revenue with anyone. So they're sort of fixed expense, or sorry, variable expenses are actually lower. But yeah, essentially, it'll be interesting to watch how those APYs come down, and it might be a great time to have Technisys as those APYs start to come down, and also judge how much money is flowing into markets from money market funds, from individual savings and bank accounts, stuff like this. It'll be fun. Do you know what the current SoFi rank in US? Are you talking about the bank rating or like an app rating? Once you clear that up, I can get an answer for you, because I'll probably know both. Or is it something else? The dog in me says that full integration takes us closer to sign legacy bank. I think they're completely unrelated. Technisys, whether they are with us or not, is its own entity that's selling its own products. It's just backed by a bigger bank account. It's a different story whenever they signed with us, like whenever they became a part of the SoFi team, but not whenever they started working with us. Tanner, work your magic and get Noto to talk about business accounts. I've been much more successful talking with other companies than I am with Mr. Noto, but we've exchanged some words, but only him really correcting me on mistakes I've made, which is funny. I'm afraid user growth will have stalled. What do you mean by stalled? Like we're going to see zero user growth? Is that what you're saying? Like sort of what Robinhood did, where we topped out and now we're going like this? Because I will bet against you privately. Moomoo in talks to buy SoFi. Hey, maybe one day. They're much bigger in terms of their user base and stuff. Moomoo has like 22 million users. They're absolutely massive, but not quite. Very different. Very different. Shane answered your question, one man show. If you're talking about banks in terms of deposits, SoFi is at 78th. Are you talking about deposits there, Shane? Or are you talking about consolidated assets? I think you're talking about consolidated assets. So if the big 3.0 update for SoFi is Technisys, what does that mean for market analysts and saving money? So they said in 2025. So remember, okay, this is a two-parter. Okay, one, that means anywhere from 70 to 80 million dollars saved per year in terms of costs to run the bank. 70 to 80 million a year. But two, that's already in the guidance, right? They know exactly when that's going to happen. They are going to factor that into their growth. So yeah, I think what maybe is not factored into their growth, or maybe what's not factored into analysts' growth, is any sort of revenue climb or growth from Technisys' side. There's a tweet I should check out. All right, I'll check out a tweet. I'm checking. Assets were 68th. I like that. I like that a lot. But yeah, guys, pre-game show tomorrow morning. It's going to be a lot of fun. I love listening to the earnings calls. I'll try to catch as much of it that potentially you guys might be missing. We'll be throwing it up on screen just to make sure. I'm doing a full recap video right afterwards. Yeah. Tevis said he has to go right at 9 o'clock. So we might not be the stream might cut off right after the call, but Then I'm going to open up a second live stream for PayPal. And then potentially that just is going to run for a long time where we listen to PayPal's call, we do a review on that, and then we also end up recapping both companies. I can't wait. Shorting SoFi is the best. I mean, you said that at $6, then it ran up, and then you weren't in the comments. We'll see. Okay. Yeah, you know what? It's true. I don't care about him wearing shoes, but he was very confident and answers a lot of people's questions that people have, including analysts. Like, I don't just mean us, like in retail investors. I think there was some questions that analysts wanted to hear that also changed their opinion. And that's important. As much as many people tell you, like, oh, don't listen to analysts, do your own research. And to a lot, like to a very big extent, I also agree. Markets move on what analysts say, and other institutions rely heavily on those reports. Whenever Noto talks, the stock goes up. I mean, yeah, he's got to get on his Jensen grind. He's got to start going like on tours. Like after this earnings, see, here's the thing, okay? Whenever this earnings was coming up, I don't mean SoFi, but this earnings season, there were like actual companies saying like, hey, can we potentially come on for an interview? And I said yes to a couple of them. So, I mean, we're going to have some fun conversations on this channel. But one thing that I did want to say is like, SoFi, man, this would be such a great place. I talk about you guys every freaking day. Come on, man. Anthony Noto, you're right there. Let's have a chat, man. It could be 20 minutes. It could be 20 minutes. I'm not going to ask you about the stock. I want to ask you about the future of banking. I'm not going to ask for Jeremy Rischel's resignation right there, okay? I just want to ask, does he have vacation days? Is he using them all every year? Or is he like kind of like, is he doing the 12-hour shift? I want to know. I'm kidding. Taryn, do you have your executive videos scheduled? Don't tell me it's Moomoo. That would still be cool though. Okay, you're lucky. You just saved yourself. But no, I mean, they're going to be fun. They're going to be fun. They're stocks that I cover here on this channel. Yeah, tell Noto you're going to ask him about college football and he'll do it. Yeah, I'm going to do it on lacrosse and he'll come on. But yeah, I mean, there's one thing for sure, like the work ethic from Anthony Noto, because he's just been a little bit more of a public figure than Jeremy Rischel has been. Like we get to see some of that. I trust that he's working around the clock. And I'm not saying, like, honestly, I'm not saying that Jeremy Rischel's not. I would not know what this man's day-to-day is. I cannot know. What I do know from the results is either they are banking a ton of products and are going to release them, whether it's on 3.0 or something like this, or the whole team was waiting for Technisys to finish their job setting up their backend, which can take a very long time. And during that time, like their product team was picking up phones for customer service. Like, I don't know. Like during that time, what are they all supposed to do? There's a ton of them, I don't know. Noto bought shares 4 times this year. He knows something. He buys shares every single time it dips below $8. So yeah. Or even $7, sorry. Give me Derek White. Hey, I mean, don't put any heat on Chris Lapointe. That man can speak too. He can move the stock for sure. A CFO is a very powerful role. I'd love to hear from him. Do you have any idea what the $1.4 billion in Goodwill in SoFi is on their balance sheet? I mean, I don't have exactly. I mean, a large part of that is probably built up from overpaying for Technisys and Galileo, right? Like, if a company doesn't make that much, then it's got to go somewhere. The balance sheet's got to balance. Goodwill seems to be a good dumping place. I mean, I don't know. But they did write it down a little bit, and they'll grow. It'll be fine. CNBC not even showing SoFi reports tomorrow. I mean, that's fine until if SoFi does a good beat or really raises guidance and the stock moves 10+%, I guarantee you CNBC is going to be talking about it. They want good news to cover. Tanner, who will be on tomorrow? So, okay, the ones that are guaranteed is myself, Tevis, and data-driven investing, Chris Hager. So that one, those ones are for sure. We have another one that is he's tentative right now, so we'll find out later. Like and subscribe. I mean, hey, wouldn't mind it. Put Gary Gordon in the Q&A. That's funny. That's funny. Summaries change with each. Summaries change of stock with each earnings. I mean, it's true. It is true, but something also needs to change in terms of how they're actually doing. And is that going to be reflected in tomorrow's earnings? I'd be hard pressed to believe so. Do I think it'll be better than what analysts are writing? Yes. Do I think that same thing for PayPal? Absolutely. But it's all in the guidance for both companies. I know it sucks to say. It's a boring word to say, but it's so true, especially in SoFi's case. It's not well known yet for PayPal's case, but it really is a transitional year for SoFi, right? And I don't know if you guys have given the numbers a chance in terms of how to try to see how they're going to grow financial services 75%. The numbers aren't numbering right now. And if you're going to continue the amount of growth that they've been having, which is adding about $20 million per quarter, each quarter in terms of revenue, that doesn't get us there. That doesn't work enough anymore. So there's got to be some level of a ramp. And then in Q1, they said, we're going to see 75% growth. In Q4, they said that. In Q1, then they said at least 75. They came out and specified that that's our bear case. Okay. So what are they going to come out this quarter? If they increase it even more, I mean, they are expecting either some unbelievable level of member growth that we can't see. This is also why I don't believe a stalling out of member growth, or some level of revenue per user multiplication in terms of how much they're making on a per person basis, right? SoFi Relay just doesn't make enough money. I mean, it makes no money. So there's going to need to be either a ton more money being made on SoFi Money side, which if they continue to bring in more and more deposits and more spend, it will continue to fly up. But another part of that has to be from SoFi Invest. It's got to be from the credit cards, or something else. But it's probably going to be there. Anyone sleeping tonight? Christmas comes 4 times a year for SoFi investors, eh? We'll have to see. In summary, crazy MBA marketing, which they did not talk about last quarter. I don't know if it's crazy or if it's just normal for the amount of marketing spent. Like, we don't know what they're paying for. So is this an elevated amount of marketing, or is it just aggregated in that direction and less on potentially traditional means like TV commercials or something. I don't know. 3.0 software, we don't know what that is yet. I'd love for them to talk about it. I'm glad we found it. Lots of Galileo videos since last quarter, very much so. And not just videos, a lot of like Galileo product changes, right? We got wire transfers and we got 3DS, which are massive. Everyone thinks like, oh, who does a wire? Well, businesses do wires. Like there are hundreds of billions of dollars that go through wire transfers still to this day. For Galileo to not have those products was pretty surprising. The fact that they do now may open it up to many new conversations or much more revenue on a per client basis. All in SoFi, I also don't think this is smart, right? I can be wrong. I'm just going off the information that I'm seeing. I'm seeing less negative news and more positive news. Commentary from management, which historically, whenever things were going to go wrong, they've given us warning. They've given us preliminary earnings saying we are not going to hit our targets. Nothing like that came. Okay. So I'm seeing positives, but that doesn't mean that that doesn't mean that I'm right. Okay. Diversification is still very important and you can still make a ton of money. Mr. Taylor uses wires. Well, maybe one of your favorite fintechs will bring it to their business. No, slave, tell Brooklyn. Sorry. Tanner, I'm short 1 million shares because you told me to. I don't know when I said that, but good luck, my friend. I have my shares up. Like you can short against my shares. I'm allowing them to be borrowed out. The SoFi crazy people go, how could you possibly do that? Because I'm going to make more money doing so. You know, in the long run, in the end game, I believe that SoFi is going to go up. And in the interim, why not make a dividend? So you guys can do what you want with your shares, but I don't care about the whole not allowing people to short so then I can control the price because your shares are not going to mean enough. What does it mean to borrow shares? So this is a real thing in secondary markets that people can go out and ask to borrow shares from other people to say, hey, these are your shares. Like I'm going to return them. But in the meantime, I want to have possession of them so then I can sell them on the markets. Now, why would they do that rather than just buying their own? Well, I'll explain it. So if, for example, you want to essentially go out to someone and say, hey, I want 10 of your shares. I'll just make the math super easy, okay? I want 10 of your shares at $10 a piece, okay? You borrow them at that price. And then if you're wanting to short them, then you would immediately sell them back onto the market at $10. So you went in with $100, bought shares, you have no money, you sell it to the broad markets, you now have $100 again. Then if the stock price actually does decline, which is what you hope for, let's say it goes down to $5, then you go back, you owe that person, you don't owe him $100, you owe him 10 shares. So that's exactly what you're going to go do. You're going to go take your $100 and buy only 10 shares at $5. So that's $50. So you have $50 extra, but you still have 10 shares. So then you just return those shares to their rightful owner. That's why you would borrow. You pay him a small, tiny premium, maybe $1 on that entire transaction. The person who was lending out their shares feels nothing differently. He was not going to sell them. He owned 10 shares before. He owned 10 shares now. But the price of the stock has fluctuated dramatically. Okay. The person who was shorting did that whole exchange, walked out with $50 new and returned that person's shares for another 100. So he had 100, now he has 150. Hopefully that is easy to understand. That is the art of the short. The problem is, and why everyone says that shorting is so dangerous, is one, you're paying a premium to that person, that dollar, right? that immediately cuts into your profits. Okay. And two, a stock can only go to zero. Okay. On the upside, it can go infinitely. So, say you were trying to bet against an Amazon or a Google or an Nvidia. If you went out and bought that stock at $5 and then sold it, and then said this will go down, and then the stock continued to climb, and you're like, I'm just going to wait for it to dip just a little bit more, and the stock runs to $130+. Well, you still need to give him back his 10 shares. You started out with $50, but now your payable is going to be like, or the cost that you're going to have is like, a ton. What did I say? 10 shares, so $1,300. Okay. Someone got my shares for 30 cents cheaper. Okay, so this is so let's keep on this conversation just really quickly about shorting. Is that the reason a short squeeze can happen, or why you would hear something like that, is that no one wants to get caught up in that sort of effect where not only are they paying premiums, but the stock price can continue to climb into infinity. So they need to cover, right? They need to go out and buy those shares back so then they can return them to their rightful owners, which will actually cause more buying on the markets than what would have previously happened. So what can happen, what Elon Musk has historically done, what GameStop has historically done, is that with companies with very high short interest, similarly with SoFi, and nearly 17, 18%, is that amount of float eventually will need to go in and buy those shares if they don't want to get absolutely obliterated. Okay. If the stock does rise, if it falls, then those people win and we lose. But not even we lose, because that's the great thing about holding long, is there's no cost to holding it. So if you believe in the long term, and SoFi is essentially extending that roadmap, it's like, okay, it might hurt in the interim, but it doesn't necessarily hurt you at all. Amazon is probably the number one example of that, where whether you looked at getting that company in 97 all the way to 2000, I mean, beautiful company, maybe you bought up there, that's cool. Then the stock actually crashed. Is the company worse off? I mean, yeah, there was some actual deterioration in terms of their revenue and profits, but over the long scheme of going from 2000 to 2009, the stock was just getting better, the company was getting better and better and better and better, and it was not reflected in the stock price. You would still be underwater. But would you want to buy Amazon in 2001 to hold it to today? Absolutely. That'd be a trade of a lifetime. So look a little bit longer term, try to see where SoFi is going and monitor their performance. Doesn't mean that because they've had success previously that they're going to have success now. But I mean, hey, it sure is looking good for SoFi in terms of the total addressable markets. That's why I read those reports on like the state of payments report. You guys think it's so boring, but I want to read if we are going to a cashless society, if we are getting digital bank accounts, like, are there things happening that are actually showing that what SoFi can do will be a 10-year long scheme? Is this business going to keep growing for that period of time? Ark Invest reports no interesting trades to any of its funds today. Well, that's fine. I'm going to tank the market tomorrow. Please don't. Jerome Powell. I believe in the long term, says Steve. Yeah, I mean, the long-term viewers, I mean, you kind of have to believe in it, right? If you're going to keep coming back and thinking that I'm not crazy. Do you have a chart on customer acquisition costs, payback length over time? I think I do, actually. And Josh, that means that you should have access to it, brother. Let me see if I can find that for you. Bear with me. Oh, look who's looking at the spreadsheet. It's Josh. Oh, okay. Here, let me just see here. Take a quick look for you. Customer acquisition cost. Yeah, CAC payback period. Oh, you're just saying you want to chart it. Okay. Here. Sorry, guys. I'm doing a little bit of work. I'll show you guys too, though. So this is customer acquisition cost, which we know from SoFi has been climbing quite drastically. Not drastically. I mean, there's been SoFi's motto has not been to acquire every customer, right? They're not trying to do the Cash App thing where it's like, hey, come on, come one, come all. We'll take all of you. SoFi has been like, hey, do the young professionals want to come join our thing? Like, that's why they're sort of sponsoring these specific groups where they're like, hey, we want to bring in this targeted audience that they believe is, making more than the average people. Which historically, whenever you look at the average FICO score in America versus the average FICO score on SoFi, is like egregiously true, right? Let's see here. CAC, payback, period. All righty, Roo. I cannot believe I just said that. I'm a frickin' loser. I hit you guys with the righty, Roo. Okay, let's take a look at this chart. So this is a very interesting chart. How do I back it up? Can you see that very well? No? Maybe I could make the font size just a little bit bigger. Bold that so that you guys can actually read it. Maybe I can close that out. Make this bigger. Yeah. I mean, that's probably, oh, wait, no, I can do that. Hey, we're getting there. All right. So this is the amount of months that it takes to pay back a SoFi customer. At the highest, it's been almost 17 months. At the low, it's been 11.8 months. But currently, it's sitting at about 14.4. Now, this is so like, how do you say it? Like aggregated data and putting a couple things together that may not belong together 100%. But yeah, essentially, this is the picture that we should be looking at, is that whether these numbers are not exactly true, I bet the trend line is somewhat true. That it is up for the most part, but in the last couple recent quarters, it's probably down slightly. How do I do this? Wait, what is it? Trend line. There you go. All right. And then a bunch of other charts too. All right. The PayPal FOMO will be real. I mean, I sure hope so, dude. The only thing that I don't like about PayPal is I don't honestly believe. I like the total addressable markets. I like the cost savings. I like what they're doing in growth in some of their areas. Like I do like the story of growth at a reasonable cost. Where I think I went wrong with PayPal is, do I believe in PayPal over the next 10 to 15 years? And the answer is no. Like I'd much rather hold SoFi and I'd much rather hold Nubank than that company. For me, it was like a trade. Like this has gone way too low. I want to buy it when it comes back up. And people are not necessarily seeming that that's the bet that they want to make at the rate that I thought they would. Buy the course, guys. Hey, I mean, I approve this message. Tanner's got the charts. Yeah, I didn't even get through the scrolling. That wasn't even all of it. And that's just for SoFi. I've got other stocks on there too. Yeah, if it comes back up, because I don't know. For the people who like know that that's the case, that their stocks are going to come back up, it's like, you can laugh at that all you want, Captain, but you're not going to show your stock performance. I'd love to see what you're buying. You talk a lot of that ish, but you don't talk about what you're buying. And of course, in the past tense, you're going to tell me that you bought everything that was great. But I'd like to know what your next big play is so then I can track that. That's what I'm doing, you know? Talking about fintechs that I like. Um, yeah, tomorrow I hope is party time. I hope so. One day for PayPal, but I don't know when. I mean, they need to show any real reversal in growth or margins. That's the story. One of the things that I think is so interesting, let's talk about some expectations for tomorrow. So, bear with me. Bear with me. Okay, we'll do PayPal first and then we'll jump into SoFi. So, the expectations for tomorrow for PayPal are quite interesting. According to Seeking Alpha, the consensus EPS. Oh, sorry, I'm in court. I need to go to quarterly, and this is not the quarterly. Am I looking at something wrong? Okay, here it is. Consensus EPS. It actually went up a little bit. 99 cents. It was 98 cents yesterday whenever I looked at it. So 99 cents. Crazy. Now, you're going to say, hey, minus 15% growth. This is egregious. And to some extent, it is. However, there's been some changes. Not only do I believe that 99 cents is not going to be the case, I think it'll be much higher than that. I'll tell you that estimate in a second. But also, revenue expectations are going to be 7.82 billion. Okay. Excuse me. My expectations are 7.95 billion. So much higher on the revenue. It's going to take that growth rate essentially quarter over quarter from 1% to about 3.5%. So much more aggressive. I know that sounds like not that amazing, but in this turnaround growth play and for PayPal, that is very aggressive. Okay. The best thing about stocks is that you can make 100% gains on the slowest growing companies and the fastest growing companies. The real thing is how off from consensus are they going to deliver? How much surprise are they going to bring? Right? That's really why whenever you look at like these earnings companies and stuff that try to predict these things, they say this is the growth rate, but here's the surprise percent because that's what matters. Like a company that makes 1% growth per year is like whatever, but if they make 2%, that could be a huge deal. So going from 1% to 3.5%, big deal in my opinion for PayPal. And EPS, I think will honestly be around $1.15, $1.20. Now, the reason why I say this is a two-parter, okay? One, I'll just show you what was in their last expectations. Their non-GAAP EPS targets had changed. So before they were just looking at essentially their earnings, but they were cutting out SBC and related taxes and stuff. But now they are including SBC or stock-based compensation. Okay, so you're going to see much lower, impacts on, much lower year-over-year growth than what people would expect. But in terms of the company actually bringing in money to their bottom line, it is still going to be the same. It's just they are now adding in a new factor, which is stock-based compensation, which is saying, hey, growth shouldn't just be based on growth at all costs. I want you to see another, like judge me for the full business. Don't just judge me for these minus stock-based compensation because then we're not seeing the full picture. So the company is actually doing the right things. I just don't think it's going to be 99 cents or even 98 cents. I think that's way too low. Historically, Q2 has been a pretty freaking strong quarter for PayPal over Q1. Okay? We'll have to see. We'll wait for tomorrow. Now, SoFi, very similar picture as well. Okay? These companies are shot down, right? They're not being loved right now. So whenever we look at, am I looking quarterly? Perfect. Whenever we look at EPS estimates for SoFi, zero, high of 1 cent out of 12 analysts. High of 1 cent. Okay. But then look at this. Next quarter, 4 cents on the high. So very different estimates. This is why guidance is going to be so much more important than the actual earnings this quarter. Now, this I still think is low. This is them saying, hey, you know what? They might bring in $5 million of net income. I'm thinking they're probably going to bring in somewhere closer to 20 to 25 million, maybe even 30 if they just absolutely blow it out of the water with selling loans and also recuperating that in other originations. I Now that I think about it, I don't know how much actual like wholesale loan activity we've seen this quarter, but I could get an answer. Well, I wouldn't need to get an answer by tomorrow, actually. And then revenue estimates, $567 million, up only 16%. What I think is egregious is like as we go further on, it's like, man, these growth rates really? December of 2024, 7%. We're cutting rates, selling loans, originating new student loans, and you think we're going to grow by 7%? You know? I think that we're probably going to see this quarter about $572.4 million and about 2 cents of EPS. That's assuming no sort of changes in actual, like any sort of gap shenanigans that are like going to change the number, like what we saw in the last 2 quarters, where like we saw 88 million, but we didn't really bring in 88 million. It was more because of what was it, the $59.2 million that we got to write on there. I think all that is not going to happen. Are we going to 850? I mean, that's up to the market, man. Guy, that could be up to you. Buy the stock, we might go up. I don't know. Follow a different channel if you want some Nostradamus guy that's going to be right 50% of the time and wrong 50% of the time in terms of just guessing what other people's actions are going to do. I can't do that. Okay? I'm just going to be honest about what I'm seeing, and that is that I believe that we're going to do better based on how the company has performed, what they're saying, and everything. And yeah, remember they've always beaten expectations, always, 100% of the time. It is not going to be this quarter that they miss. It also means that it doesn't mean that the stock goes up on that news, right? But it is good. If they raise full year guidance, there's most likely we go up. If they raise next year's or next quarter guidance, or if it surprises to the upside, we'll go up. If they come out and say, hey, we've actually adjusted our 2026 from 55 cents to 80 cents to 60 to 85 cents, the stock's going to boom up. Yeah, B-Dub's been saying it forever. Like I said before, I don't care about Q2 nearly as much as I care about the second quarter or second half guidance. So Q3 and Q4. That's the personal key for B-Dubs. And I agree. That's the sauce. What brokerage am I using in Toronto for options trading? Moomoo. You could check out all the deals for Canadian investors down in the description down below. Thank you for asking. Could they raise 2026 guidance? Absolutely. Absolutely. One of the things that Chris Lapointe said that was super interesting last quarter during the earnings call was that their current, during a fireside call, was that during their current guidance for 2026 was assuming no new product launches, no new services, no expansion, nothing. It's just business as is. That's what we're going to bring in. That is crazy. You know? My eyes are on guidance. Gotcha. Moomoo. I would have preferred SoFi earnings after FOMC, 100%. This is the thing that SoFi keeps shooting themselves in the foot for. I feel like they just keep putting them in front. However, are we expecting a really bad July meeting? I'm not. I mean, either I mean, maybe they don't talk about September, but that is not what I'm reading. I'm reading that they are essentially just going to be talking about September meeting, and that's what everyone's eyes are focused on. So, what are the two outcomes for the meeting, in my opinion? I'm super bullish all the time, so it's a little bit of a problem. But my two opinions are they're going to surprise to the upside and do a cut in July, which would be very surprising, or, and I mean very surprising, or they stay on course and they say, we're going to be monitoring, employment data and inflation data in the near term and make a decision in September. And that'll be fine. So everyone agrees, Moomoo. Yes. I mean, it's completely up to you, but I'm a little biased. Just look at what they offer compared to their competitors. I mean, they have extremely good rates in terms of their commissions for options in Canada, and the APY that's sitting in your account whenever you're not investing is also really aggressive in a good way. Kind of hard to beat that. Yeah, everyone in America is like, commissions? What do you mean commissions? Yeah, well, in America, everything's free. Every brokerage offers you guys everything free. All right. Also, did you know that SoFi has a 5 out of 5 star rating on the App Store? Is that true? I thought it was 4.88 stars out of 5. Remember that day when Tanner had a booger in his nose? Good, good times. Yeah, I was like going on this crazy monologue, just going nuts. And then I look over, it's like every comment is like, your nose, your nose, blow your nose. And I'll never tell you, what episode that was. You guys are gonna have to go back, but I guess some people remember. It was just a little something. Whatever. That stuff doesn't bother me too much. Tanner, if you were to give your best guess on where retail sentiment is on this stock, on SoFi, I think it's a mixed bag. It's all like, I'm a part of retail, but retail sucks. Like, in terms of just, if it's down at 6, they hate the stock. If it's up at 9, it's the best stock. If it's up at 11, it's euphoric. We're going to 25 in two months. And that is just waves that you just have to ignore. But yeah. I did suffer a massive wipeout in Jamaica. However, my shoulders are feeling amazing. I am not only working out every day, but I am running every day. I feel like $1,000, $1 million. I gotta up my standards. Predictions on tangible book value growth. I haven't thought about it. I don't know. 200 million? I don't know. I have no clue. I'd be guessing in the dark. I'd have to think about it. But I don't have time anyway. I still believe we have a 2x run over the next 6 to 7 months. Dude, it's it's crazy how much the stock can run. People forget. Like, I even was watching Amit, and he was looking at the stock and covering it, and then he was like, "Oh, if this company goes down to, if the company goes up to $9, I'm just going to take all my chips out and run." And I'm like, you know what? If that helps you sleep at night, that's your best investment. But it's looking historically at what SoFi has done and going, okay, it's going to stay in that pricing range forever. But I'm like, man, you come from the Palantir community and you act like stocks can't be repriced. So I'd stop worrying about the price, start worrying about if you like the business or not. And I think personally for Amit, he doesn't like the business anymore. I think he's just sort of over. He wanted more of a bank play rather than an actual bank, and so he doesn't hold it. And that's fine. Like I get that, but for me, um, I do like SoFi. Like I do. Maybe I'm just a financial nerd, but like I think it's one of the largest industries in the world, finances. All these big banks that make just money hand over fist, and they're also not very good to their consumers. They treat them as if they're their only option and they run a monopoly. And that's quickly becoming not the case. And history tells me that every time that that's happened, where someone has come into that sort of space in this, um, monopoly that might not be um, intruded upon in bad wording, but you get what I'm saying, that there are huge gains to be made. And historically, SoFi has been able to make those gains and satisfy users and bring them over to the platform. And everyone says, like, whenever I make these connections to uh, Amazon or something like this, they're like, how could you possibly compare Amazon to, well, it's like, dude, back in the early 2000s, like people would say that, how could you possibly compare Amazon to Walmart? Like, how could you possibly compare Jeff Bezos to the Sam? What's his name? Waltman? Why am I forgetting his name? Sam Waltman. It sounds right, but it also sounds wrong. Walton. Sam Walton. Sorry. Hey, yo, my B. But so yeah, I am trying to find the next big names, and then it's not Altman, dude. Relax. I'm talking about the Walmart CEO. I'm not talking. You're young, dude. you you have sold yourself out. You are thinking of Sam Altman. Uh, that's funny. No, I'm talking about the Walmart founder. Am I getting his name wrong? Sam Waltman. So Walton. Sorry, I'm still messing it up. All right. Shloomy, you've been here too long. You're banned. I'm banning you. You keep just promoting your little shit coin. You're out. This dude does this every day. Sometimes he actually puts real comments in the thing, but it's too late. That name. Walton. All right. Okay, so yes. Another thing, everyone's just I think there might be a little bit of a delay in the stream or something. Actually there is. I'm looking over at it. It is kind of delayed. Huh. All right, whatever. So, let's get back to some news. Let's talk some stocks. Yeah, so I covered it already. PayPal's expectations for earnings are just like abysmally low. We're going to turn that around. They actually also got a bunch of people today downgrading the stock. So, one Morgan Stanley analyst put a $67 price target on PayPal, like a day before earnings. And then analysts from Wells Fargo gave it a $65 price target. I mean, abysmally low. That sucks to hear, but like you're going right into earnings, boys. I hope you're wrong. Tanner, have you noticed the banking sector, like Bank of America, selling off, even though Bank of America's profits are much better than SoFi? I think that that's a really... Michael, you've been doing it too long now. If you guys don't know Michael Anthony, he says he's been trading stocks for 68 years. But Michael, I do not like this analogy. There are companies that make a ton more money, but then how do you ever bet on a small cap? Ever, right? Even though historically they've performed better than large cap stocks. But 3 cents would do amazing for SoFi because of that surprise percentage that I was talking about earlier. That people would not expect it. And that maybe the growth trajectory for earnings on SoFi would be more of like a hockey stick rather than Bank of America, which is kind of set in its ways and it's going to continue to do this. And that if you guys are seeing it, maybe I'm going the wrong direction, is still up and to the right, but it's not quite the very low. Sorry, I have to do everything backwards if I'm looking through the camera, but very low and then eventually through the roof. It might not be Bank of America might not be a value trap. It might be a value stock, like legitimately, but I'm not looking for value stocks. I'm looking for growth. I'm looking for the future. I'm very young. I've got a long time horizon. What is the one industry that has performed better than any other? And that's tech and growth and everything. I disagree with Warren Buffett on the idea that value beats growth over time. I disagree. Not 60. That is my age. Okay, well, how long have you been investing? You told me last time that you've been doing this for 68 years. You're investing since you were 0? Eli Lilly surprised me. Yeah, I mean, who knew that there was going to be a super drug that just healed people's obesity? I wouldn't have put that in my cards for 2023, 2024. I promise you. Hola, brother. Jesus taught me how to trade credit spreads. Why isn't there a preacher that does? Oh, God, speaking of me. I don't want to be actually, maybe I'm being derogatory, but it's just all stock trades. Yeah, it's probably an inappropriate comment. I apologize. But tomorrow is going to be a super fun Tuesday. Don't jinx it. It might be horrible. It might be really bad, but we're hoping it's good. What's Canada's interest rate? So I think we're at 4% right now, but it's come down 50 basis points. Just got a second cut. Now, what was I going to say? The United States and Canada do not trade in tandem, but they're close. But honestly, you know what's crazy? I follow American politics and American interest rates so much closer than... Yeah, Jerome Powell's right, I think. I was even thinking that. I was like, wait, did they get cut to 4% or did they get cut to 4.5%? Anyway, I follow your guys' stuff way more because 90-something% of my money is in America. Matt of the North says, hey, Lisa. Yeah, but this isn't necessarily a true comment. I mean, most of the time that earnings comes, SoFi actually does go up. Last quarter, it went down. So people think that like, oh, this is typical, it goes down, but that's actually not true. There's been many times where we've gotten, 10+% rates going up. What is the charge-off rate? I mean, we're not going to know. At least I don't know. I could not imagine it being, 6.2% or whatever, Chris thinks it's going to be. But Chris is smarter than me on that side. Very smart. I find it very hard to believe. Is there any chance we get level 1 options tomorrow with 3.0? I mean, I'd put that down at a 1% chance. There's no 3.0 update for level 1 options. You know what I mean? I don't think that happens. $6.7 was the forecast from KBW, if I believe. Tanner, I thought SoFi was easily going to meet its 2024 growth target, and we are worried about that now? I'm shocked. I never said that. No, SoFi beats its projections. I don't even have another comment on that. No, I don't think that that's true. We have to remember that this 3.0 change is such a big deal because this app has been around for like 8+ years now. Okay. We've already released an entire financial services division that did not change the major update. Okay. We've released so many new products, including options. It's not like 3.0 is to add some form of selling option. Like that doesn't even make any sense. Like just think about it. It's going to be something very large. And that amount of very large has to be either a new segment, in my opinion, something that would require new coding, like full on, not adding a new product or something like this. You guys need to think bigger than this. There's only been 3 iterations of this app since it's been public. This is why I think it's Technisys, because that would completely rewrite the code of the business, right? That would require a major update. No, I do not think Noto's on CNBC. From what I heard from the chat, that they're not even a part of the schedule tomorrow. Could be business accounts, maybe. But maybe business accounts waits for Technisys. All right, ladies and gentlemen, this has been a good pregame, but I think I'm got to let you go. All right? I love you guys. Respect you guys. Hope you guys all have a great rest of your night. And I'll see you tomorrow morning. It's going to be fun. Rain or shine, I'm going to be there. I'm hoping for good news, as long as it's not detrimental. I mean, I'm holding for the long term. But let's go, Noto. I cannot wait for his remarks. Dude, it's getting me so excited to know that I get to make more content on like going through his earnings calls and actually like breaking out that information for you guys. Like it's my favorite part. Let me do some deep diving. Update my spreadsheets. I'm getting so good at updating my spreadsheets. I'm done in 5 minutes. I don't want it anymore. I want to take some time and build something new. Goodbye. Thank you. Thanks for having me. Thanks for watching. Thank you for coming.